Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending April 1st, 2022. Looking at the indexes for the week, the TSX, Dow Jones, and oil are all down for the week. Oil a lot. The S&P 500, NASDAQ, and Russell 2000 were all up. On the bearish side, part of the U.S. Treasury yield curve briefly inverted on Monday, raising some recession fears. Earlier in the day on Monday, the yield on the 5-year Treasury note rose to 2.63%, while the 30-year yield was down less than 1 basis point to 2.6%. The curve had reversed its inversion on Monday. Central banks are aware that inflation is a lagging indicator and it takes some time for the interest rate hikes to take effect. They will raise interest rates a few times and then wait to evaluate and see the effects of the hikes, which takes a while. The US inflation gauge increased to 5.4% year over year, highest since 1983. Lockdowns in China are impacting oil prices since the demand may decrease. Supply issues are being prolonged by COVID shutdowns in China as well. The next Bank of Canada meeting is April 13th, and the bond market is pricing in a 0.5% rate hike and another 0.5% later in the year. The economy is strong and so should be able to handle this increase. The US Fed's next meeting is May 3rd and 4th, and the market is expecting a 0.5% interest rate hike there as well due to the March US employment numbers, with perhaps a second 0.5% increase in June or July meetings. Wednesday, the US private payrolls rose 455,000, slightly higher than expected, and the unemployment rate is now at 3.6%, which means full employment and more. Wages are going up at 5% per year, which is still lower than inflation, causing negative real wage increases. Higher wages will trigger replacement of workers with machines and capital in general. Productivity is the best cure for inflation by increasing the productivity of the increasing costs. Canadian unemployment rates have reached pre-COVID levels. Experts are not seeing a near-term 2022 recession and see this as a good time to buy stocks. The US reported a 3.8% unemployment rate for March, lowest since 1969. Still, experts seem to think the chances of a recession are increasing, albeit more likely next year. Canadian stocks have outperformed the US stocks significantly in 2022, and because of Canadian oil sands break-even price of $35 per barrel, it looks like Canada has more room to run. Next week, so on April the 7th, the Canadian, meaning Liberal and NDP party budget is coming out for the federal government. Because of the NDP and Liberal agreement, there's fear the budget will include a capital gains inclusion increase from 50% to 75% in non-registered accounts. This seems to be a coin toss, but would happen only on sales going forward. The other one is taxing primary residence sales, but that seems unlikely. Canadians like their primary residence tax exemptions. The budget will also introduce the first-time homebuyer incentive, where the CMHC would offer a 5% loan towards existing homes and 10% towards a new build. The additional funds could lower the cost of a mortgage. The loan is interest-free but gets paid back when the home sells or after 25 years and is the same percentage of the home's new price. That means the government would benefit from your home's appreciation, but you're not paying interest. The 3% tax on company earnings past $1 billion is well known to be in the budget, and this is considered to be priced into the market already for Canada's big companies. And the Canadian employment data is coming out this Friday as well. So that has been my summary for the week. If you have any requests on what you'd like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.